Hey everybody, this is Tom Nash, and in this video, we're talking about Nvidia. Now, Nvidia is going to report earnings this Wednesday at 4 p.m. Eastern, and for nerds and geeks of the stock market like myself, this is pretty much the Super Bowl. We will all be glued to the screen trying to see what's going on, because Nvidia is either going to take everybody else with them outside the stratosphere or down to the junkyard. It's that important. Right now, Nvidia is literally the most important stock in the market, and whatever it does on Wednesday is going to impact everybody. If they sneeze, we will all be wet. I promise you that. Now, in today's market recap I've written for my community on Discord and on Patreon, I've talked about Nvidia, all the different risks, all the different analysis angles about the earnings. I'm not going to repeat myself. If you haven't, you can still join to the Academy, to the Patreon, to the Discord. All the details are below. I'm not going to push it today. So for today, I just want you to do one thing. Don't click nothing, don't smash nothing, don't buy nothing. Just listen to me. Now look, if you look at the Nvidia kind of mainstream media multiverse, there's a lot of different opinions from a lot of smart people.
This is accelerating. And I think the street, like you said, every quarter, prove it, prove it. This revolution is just starting, but it all starts with Nvidia. In my opinion, it is the most important earnings, not just of the year, potentially in many years, because of what this represents in terms of tech.
Sam Altman is a close friend. He believes that it's going to take about $300 billion, maybe more. If $300 billion is all going to go to Nvidia, you know what to do in the stock market. Okay.
On the one hand, you have Dan Ives, very accomplished, very smart, saying this is the best company since sliced bread. You have Gene Munster saying similar things. You have Eric Schmidt, the former CEO of Google, calling out a $300 billion spend from this hyperscalers. There's a lot of chatter about how great Nvidia is. On the other hand, Aswath Damodaran, one of the goats of valuations, is saying, hey, this is a great company, but this stock is a little bit overvalued.
Nvidia is an amazing company, great growth, amazing cash flows, superb margins. But you're paying a premium price, even given all of those pluses.
And there's a lot of conflicting information. This is why a video like this is super important. I was actually planning to make it tomorrow, but since I've seen the amount of DMs I've gotten about this company and the amount of anxiousness, I'm coming out with the video today because I see the importance of this and the urgency of this. Now, the one thing I'm going to tell in this video, and it's important, it's imperative that you listen to me. You don't want to gamble around earnings. You do not want to trade the stock around earnings, even if you've made money doing so before. I know that the past 2 quarters, the stock went up 16%, 12%. I know people have made a lot of money on Nvidia over the past 2 quarters. And today, everybody's convinced it's going to blast through earnings again, and it probably will. But here's the point. Even if it does, and even if you make money this time again, for the 3rd time in a row, guess what you've done? You are building a very bad habit. You are becoming a gambler in the stock market. That's not a good habit you want to build for your long-term success in the stock market for the next 10, 15, 20 years. You don't want to be a gambler, even if you win a few times. So don't do things that are bad habits, like trading Nvidia around earnings. It's volatile, it's risky. Just the same way I would tell you don't short the stock before earnings, I would say don't trade the stock around earnings. This is not the right time for fundamental long-term investors. This is the time of gamblers, and we're not building here a community of gamblers, with all due respect to gambling, right?
Yeah, there's just a ton of noise around the quarter, but I think this Blackwell piece is probably the most important X factor about the quarter. And so that's kind of why I think that the stock is going to trade down modestly. But I don't think that stock action should be representative of the opportunity in NVIDIA over the next couple of years. Investors are going to get hyper-focused this week, but it's ultimately going to probably miss what I still believe is the biggest opportunity we've seen in 20 years. I still think that we are in the early innings of a 3 to 5 year tech bull market that's powered by AI.
So Nvidia looks stretched. Does that mean you sell it?
I think it's a dangerous game to play. If you don't own it, the only way you can sell it is to short the stock, and that's a recipe for disaster, especially leading into an earnings report.
So if you're a long-term investor in Nvidia, all you want to do is just DCA, dollar cost average. You want to keep buying Nvidia all year long, and if Nvidia dips, like it did a few weeks ago, from 130 to 98, you buy a little bit faster. Now, I've gone over this again and again. I'm not going to repeat myself, but that's kind of the mentality we have with Nvidia. If you're an Nvidia shareholder, that's what you do. Now, I think a lot of investors in the market still haven't figured out that the stock market is pretty much a gadget store. And I'll explain what I mean. When you get inside a gadget store, right, and you see a gadget that you love selling at $130, and you're saying to yourself, well, this is a bit expensive. I can't afford it. You come back the next week and now it's selling for $98. Are you going to say to yourself, oh my God, this thing just dropped $32 for no reason? I better not buy it. It might drop even more. Or you're going to say, oh my God, this thing is selling at a massive discount. I better get it right now, right? The answer is obvious. Obviously, you're going to buy it because you're going to say, well, look, this thing is trading at a discount. It's the same thing I just wanted to buy last week, right? With stocks, for some reason, people have the opposite mentality. When a stock that's fundamentally favored by them, that they've done the analysis, they've done the due diligence, and they've actually done the work, is selling at a discount, they get spooked and they fear the unknown and they kind of just get cold feet and don't buy the stock. We've seen it with Nvidia when it dropped to 98. Some people really just were too afraid to buy the stock for no reason other than the fact that it dropped in price and all of a sudden it's not that attractive anymore. Think about it like a gadget, right? If that gadget is something you wanted at 130, you definitely want it at 100. Unless there's a new model that just came out, right? And this gadget isn't worth that money anymore. But that's called a fundamental change in your thesis. If something about the company changed and you no longer want to be a shareholder, that's a whole different story. But if nothing has changed, but all you see is panic and the panic drives down the price, it's an opportunity for you. Now, I will say one thing here. I think Nvidia this time around has an extremely tall order to fill. They have a very high bar. If you haven't seen the estimates, they're looking forward to beating 112% revenue growth expectations and 125% earnings per share growth expectation. Any slight miss on this, and it's going to be big kaboom. We will all be in the toilet. Trust me. Now, it's not likely, and I do believe Nvidia should beat these earnings. I don't think they'll miss. But if by any chance they miss, everybody's going to go to the toilet really quick. And that's something you have to consider. You can't just, ignore this risk and say, well, that's never going to happen. Sure, this is a low probability event. I get it. But as a low probability event with high consequences, you definitely don't want to just ignore it and say, well, that's not going to happen. Now, look, I have to be honest with you. I also screwed up Nvidia. A year ago, I've made a post on my community telling you, hey, I think Nvidia is a great company. But I think given the current price a year ago, I'm going to keep my money personally in Palantir and Tesla because I think Palantir and Tesla will give me great results for the year. So I personally won't be buying Nvidia, even though I'm extremely bullish about the company. And I think they have great fundamentals, etc., etc., etc. But for my own portfolio, I'm sticking with Palantir and Tesla. Now, as you know, I'm always transparent with my choices. And when I screw up like this, hey, I'm going to talk about it. So a year goes by and we are here today in the future. So all of a sudden, Nvidia a year later is up 170%. On the other hand, you have Palantir up 120%, which is not as good, and Tesla is down 7%. So my portfolio is now comprised of the S&P 500, Palantir, and Tesla, significantly underperformed Nvidia at 170%. So I've made a mistake. I was wrong. I should have allocated some funds and started dollar cost averaging into Nvidia a year ago. And this goes to show you that we all make mistakes. And that's part of the process. It will always happen to you. And as an investor, you can't beat yourself down when you miss out on an opportunity like this. It's just part of the game and it happens to everybody. Now look, going forward, I think Nvidia's main risk is what will be the willingness of the hyperscalers to keep spending the crazy amounts of money they've already spent. If you ask Eric Schmidt in that lecture I showed in the previous video, he's saying it's only going to increase. He's talking about 300 billion. I mean, the numbers are absolutely imaginary. Based on the Eric Schmidt numbers from that Stanford talk, we're talking about a $5 trillion market cap for Nvidia, which is almost double from the current price. If you listen to other people like Aswad Damodaran, well, it's already overvalued. The big question is, what will the hyperscalers do? If they go to Nvidia exclusively like they're going right now, and they'll continue to spend like this or even more, Nvidia is definitely going into the stratosphere. Now, a lot of people are saying, well, that's not going to happen, Dom. This is going to be a Cisco 2.0. At some point, the hyperscalers are going to reduce their R&D expenses, they're going to reduce their capex, and everything will go back to normal. But here's the thing people don't understand. When you talk about Cisco, you're talking about the life cycle of telecom capex spending. This thing, once you spend it, is going to last a long time. We're talking about computer chips. These things have a life cycle of 2, 3, 4 years max, and then you have to have the new one and the better one. This is not going away. We're not even half through the cycle of the current stuff we have. So Nvidia is definitely going to be on top. They're not going to be the next Cisco. That's a bunch of horse manure. That's not something I'm concerned about. But yes, the competition and the ability and desire of hyperscalers to keep spending, that's something that's definitely a risk, and you have to take into account. You can't just ignore it and discount it and say, oh, that's never going to happen. You have to be mindful of this. But the next Cisco, it's not. So the question is, What happens next? Well, what happens next is you sit and you wait. And you look at the stock market and you say, okay, bring it on. Wednesday, 4 p.m., they have the earnings, they have the talk, and we know a lot better about what the hyperscalers are doing. Jensen is going to be very transparent about what's happening, and we know more. The stock market will react, obviously, violently one way or the other. It's either going to go up or down, but it's going to be very violent. If the stock flew out of the stratosphere, well, that means you continue to dollar cost average at your normal pace. But if by any chance they've missed, even slightly, and the stock have dropped, but nothing fundamentally in the analysis changes Nvidia, then all of a sudden, there's an opportunity for you to double down your DCA. Now, a lot of people have asked me about the DCA method and the double DCA method and how you buy into weakness and what is your threshold amount. We talk about these things in our academy, on our Patreon. All the details are below, patreon.com/TomNash. You're more than welcome to join and learn with us how to do this and join a community of 17,500 people. I've actually posted a video, but in that video, I've made a full DCF evaluation of Nvidia. So on the screen right now, you are seeing right here a video that I've done 2 days ago with full valuation models of Nvidia. Go watch it right now so you have all the information before the all the information before earnings. Thank you so much. I'll see you in the next one. Peace. Hey, this is Tom, and we have an incredible film for you. The fuck is this, a nature film, bro?